Welcome. Today we're diving into Infosys, a global tech giant and a staple in many Indian portfolios. Infosys isn't just another stock, it's a bellwether for the entire Indian IT sector and a key player in major indices like the Nifty 50. For retail investors, Infosys stands out for its stability, history of rewarding shareholders, and global client base across industries. Its strong corporate governance and regular dividends make it attractive for both growth and income seekers. Infosys's quarterly results and management commentary often signal broader economic trends, making it a valuable learning ground for investors. By tracking Infosys, you gain insights into global tech spending and economic health. Today we'll break down its recent performance, financial health, and how it compares to competitors. Whether you're new or experienced, understanding Infosys is key to building a resilient portfolio. Let's get started and see what's new with this IT major. Let's look at Infosys's numbers for July 4, 2025. The stock closed at Rs 645, up 0.8% for the day, with an intraday high of Rs 652 and a low of Rs 630. Over 8 million shares traded, well above the monthly average, signaling strong investor interest. High volume on a positive day is a bullish sign, suggesting conviction behind the move. The stock opened higher and stayed in the green, closing near its day's high, a positive technical indicator. This steady price action, backed by robust volume, points to quiet strength and renewed optimism. For retail investors, watching price and volume trends is crucial for spotting momentum. Today's action suggests traders are positioning for potential positive triggers. Of course, these moves are shaped by broader market and sector trends, which we'll explore next. For now, Infosys is showing signs of underlying strength. To understand Infosys's performance, let's zoom out to the broader IT sector and market. The Nifty IT index gained 1.2% today, showing sector-wide momentum, not just an Infosys story. Major IT stocks saw buying interest, likely driven by favorable currency moves and optimism about upcoming earnings. The Nifty 50 and Sensex also closed higher, reflecting upbeat market sentiment from global stability and strong domestic inflows. A rising market lifts all boats, creating a supportive environment for IT stocks. For IT companies, a stable or weaker rupee boosts earnings, as much of their revenue is dollar-denominated. This currency advantage is fueling renewed interest in the sector. Today's gains for Infosys are part of a broader wave of optimism in tech and the market at large. Recognizing these trends helps investors distinguish between company-specific and sector-wide rallies. Infosys's move today is credible, riding a positive market and sector backdrop. This context is key for making informed investment decisions. Let's focus on what's driving Infosys specifically. Recently, Infosys secured a major multi-year digital transformation deal with a top European financial firm, boosting investor confidence. Analysts have responded positively, with many reiterating buy or hold ratings and forecasting a recovery in the second half of the year. The upcoming quarterly results and management's outlook on deal pipelines are key triggers to watch. Financially, Infosys remains rock-solid, debt-free, with large cash reserves and industry-leading margins. This stability allows for continued investment in new tech, acquisitions, and shareholder rewards. Investors are watching for updates on AI initiatives and how new deals translate into revenue growth. The company's financial health makes it a relatively safe long-term bet, even amid global uncertainty. The next earnings report and management commentary will be crucial for the stock's direction. Let's review Infosys's stock journey and how it stacks up against peers. Over the past year, Infosys traded between Rs 400 and Rs 700, reflecting consolidation amid global IT uncertainty. Compared to Tata Consultancy Services, TCS, HCL, and Wipro, Infosys sits in the middle, more stable than Wipro, but with more growth focus than TCS. Infosys's aggressive push into digital transformation deals sets it apart, though it can lead to uneven growth. TCS is valued for stability, HCL for infrastructure services, and Wipro is still restructuring. The entire sector faced headwinds from recession fears, but optimism is returning as tech spending rebounds. Infosys's recent momentum suggests it could break out of its range if upcoming earnings impress. Peer comparison helps investors balance risk and reward in their IT allocations. So, what should you do with Infosys now? For long-term investors, current levels offer a reasonable entry. Infosys's fundamentals and leadership make it a solid portfolio anchor. If you already own the stock, holding makes sense as positive momentum builds ahead of earnings. The dividend yield and financial strength provide a cushion against volatility. Cautious or short-term investors may prefer to wait for the next earnings report before making a move. Risks remain a slowdown in the US or Europe, intense competition, and rapid tech changes like AI could impact growth. Diversification is key. Don't bet everything on one stock or sector. Stay alert to both company and macro risks as you decide your next step. Infosys remains a compelling but not risk-free opportunity. To wrap up, Infosys currently offers cautious optimism for retail investors. Strong trading volume, sector momentum, and a big deal win have boosted confidence. Financially, Infosys is resilient, debt-free, cash-rich, and well-positioned for future growth. Long-term investors can consider accumulating, while existing holders should watch the upcoming results. Short-term or cautious investors may want to wait for more clarity post-earnings. The next big event, Infosys's Q1 results and management guidance. Watch revenue, profit, and deal pipeline commentary closely. Keep an eye on global trends and currency movements as they'll continue to impact the stock. Stay informed and make decisions based on both company and macro factors. Thanks for joining. Happy investing.